Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. And it's a Monday morning and a start to a brand new week. We are returning after a 3-day holiday, so the markets, they have lots to react to both on domestic as well as global front. But it's been a quiet start to trading so far. Nifty is hovering around that 22,500 mark. Now the index did make a fresh record high of 22,526, but I mean we are at record highs, so pretty much any surge up will get us to record highs, but we have reversed course since then, and Nifty is currently hovering around just below that 22,500 mark. And if you look at the past two sessions, of course we are at record levels and we have rallied, but the indicators, they are hinting at consolidation, and even that seems to be the case with with global equities, Amit.
Jittery in the West after the inflation data. I believe the markets are waiting for further indications of rate cuts from the Fed. Tesla was down 1.85%, Nvidia was down 5.55% on Friday. I named these stocks because these were the cushions. Apple was slightly in the positive at 1.02%, but the tech stocks, which were the cushions for the markets in the West, were down on Friday. Dow Jones closed in the negative at 0.18% in the negative. S&P 500 closed in the negative at 0.65%. Nasdaq Composite closed in the negative at 1.16%. The European markets fared better. The Stoxx 600 closed in the positive at 0.02%, slightly up. Hang Seng has been up again today. It was up 1.38% this morning. So the optimism from the Chinese government's targets that have been set is playing out in the markets. Nikkei is down quite a bit at minus 2.64%.
All right, and if you look at the movements over the last, because we have 2 days worth of market action to react to as far as the Wall Street is concerned, and because the big Q over the weekend was the jobs data that was going to come out, and the markets, I mean, they were initially happy with the jobs data. They thought that it was looking rather strong, but a deeper analysis of it shows that it's on the weaker side. The headline job additions number that came out strong, but unemployment rate and average hourly earnings, they were weak, and that's why we saw a big correction in Friday's trade as far as Wall Street is concerned. But overall, about 0.3% move if we look at the 2-day action for the Wall Street, but nonetheless in the negative. And as I mentioned earlier also, it's been a quite start for us as well. We are hovering around that 22,500 zone, actually trading just below it. The broader markets, they are trading all the mix this morning. Remember Friday, Nifty small cap tried to see some sort of a recovery, but it's trading with a cut of about 0.2% this morning. The mid caps are doing fairly better. They are actually the strongest segment of the market as we speak. They are up about 0.2%, whereas Nifty and Sensex are flat. Nifty is just hovering below the 22,500 mark. Sensex, on the other hand, is still holding above 74,000 levels, and volatility that has seen a pickup. India VIX had declined to 13 levels on Friday in Thursday's trade, beg your pardon, and but this morning we are back above 14. So the overall texture, it's looking rather, it's neither here nor there, but to get some direction for the market, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. Thank you for joining us here on News9, Avni. Always a pleasure speaking with you. And we were just talking about this overall texture of the market. We have done phenomenally well over the past couple of weeks, but some bit of a consolidation is seen happening at higher levels around that 22,500 zone. And even the global cues, they are not really supportive. And if you look at the texture of the market, it's just 1 or 2 sectors that are participating on a rotational basis on the upside. And of course, there are cracks in the small cap space. So how is this setup looking for the benchmark Nifty?
Good morning, Suyash, and good morning, Amit, and a very good morning to all the viewers as well. Yes, so Nifty is flirting around the resistance area of 22,550 to 600 area. And that's a very crucial level where we could see some profit booking. But if you look at the overall broader trend of the market, it's pretty positive. And I believe by month end, by the end of March series, I think we should be heading close to around 22,800 on the upside and probably 23,000 also. That would be, at the later half of March, in the second half of March. Till then, from around 20 to 550 to 600 levels, we could see some profit booking. And on the downside, 20 to 350 is a very good support level. And 22,000 remains to be a very, very crucial support level for this entire uptrend. So as long as we stay above 22,000, I think the texture remains positive, and we should be heading towards 22,800 to 23,000 by month end. Now, on similar lines, Bank Nifty is trying to, at least test the all-time highs that it had made earlier. And on the downside, 47,700 is a crucial support level. If that is breached, I think we will be heading towards around 47,400 levels again on the downside. And but overall, I think it should stabilize. It's consolidating right now. On the upside, 48,300 is one of the major resistance areas, and above that, only if it crosses that, then it will be able to test the all-time high of 48,600. So again, once again, Bank Nifty is a slow mover compared to Nifty, and there are a lot of sectors that are supportive of Nifty. So on rotational basis, as you said, so as and when there is any kind of correction in the market, there is some or the other sector that comes and comes to the rescue for Nifty. So I think Nifty overall the texture is better, and Bank Nifty has to catch up. So consolidation, once the consolidation ends, it should move up, but we are not looking at a very major downside as of now.
Good morning, Avni. I would like to drive your attention towards Reliance Industries. One would think that the Disney merger and the celebrations at home would give optimism to the investors. But the stock has been in the negative as far as returns go in the last 1 week. 1.82% in the negative last 1 week. It has not been able to breach the 3,000 mark. It is floundering today at 2,970. What do you make of Reliance? Just a blip and it is going to go up again, or something else is happening?
Reliance, Amit, I think you should look at the options data. It's a very clear picture coming in from the options data. There's a huge OI built up at 3,000 call and put. But if you look at the open interest quantum at 3,000 call, it's way higher than what built up we are looking at on the put side. And the second highest open interest is on at 2,900 put. So basically, Reliance is consolidating in a range of 2,925 to it did try to cross 3,000 and made a high of 3,025. But again, once again, it is in a consolidation phase, 2,925 being the support level, and 3,000 is a very crucial resistance, which I feel will not be crossed in this month at least. And whenever 3,000, a close above 3,000 is seen, we should be seeing Reliance heading towards 3,100 in no time. But as of now, for this particular series, I don't think it is going to cross 3,000.
All right, and another stock that we are focusing on in, this morning is Tata Chemicals. Now, after that 6-day run-up where the stock surged about 40% or so, and that was on the back of reports suggesting that Tata Sons will have to come out with their IPO by September of 2025. But I mean, this morning the reports are suggesting that they are looking ways to avoid that listing in September of 2025, and of course, Tata Chemicals was going to benefit greatly from that value unlocking exercise, and that's why the stock was rallying. But with Tata Sons looking to avoid this, avoid going public next year, the stock has taken a beating this morning. It's down by about 10%. But Avni, overall, it has been in that consolidation phase for the longest of time, and most of the upside that has come for the stock in the last 12-15 months has been in that last 1 week. Do you think that this news that Tata Sons will perhaps look for ways to avoid this public listing, could that have long lasting impact on Tata Chemicals?
Yes, so Tata Chemicals, I very well remember we had discussed on Thursday also, and
Right.
I was very bullish on the stock and had given a target of 1330. Don't be in a hurry to book profits below 1300 at least. So on Thursday, it did made a high. So technically speaking, news flow is coming, and but technically, if you talk about it, 1330 is the level where it is fully valued. It tested that level, and now I think it should retrace back to the breakout level of around 1185. So it can retrace back to 1185 and then undergo a consolidation phase. So we are not looking at any major upside from here on. It will be a slow mover, but we won't even see any major downside. So 1185 should be kept as a stop loss, as a trailing stop loss. And on the upside, max it could see is somewhere around 1265 to 1270 levels from here on. So it's going to be a slow mover now. The game is over. I don't think we should be taking any trades in this stock now.
Slow mover on Tata Chemicals is your view. Avni, what do you have for our investors today? Your picks.
Given the texture of the market, I'm going to give only three picks this week. First is Bharat Electronics. Bharat Electronics, we can target around 228 to 232 on the upside and keeping a stop loss of 204. The second pick would be MCX. So MCX has also formed a very positive structure on the charts, and it has undergone a good consolidation phase, and post that it is looking up again. So targets would be 3900 on the upside, and stop loss can be kept at 3460. And the last stock would be SRF. So SRF around 2445 to 2450 is a very good support level. We can buy around those levels. On the upside, target would be 2520, and stop loss can be kept at 2408.
All right, SRF, MCX and Bharat Electronics on the radar of Avni Bhatt. Ma'am, thank you for joining us here on News9. Appreciate your time and your thoughts. But with that, let's slip into a short break. On the other side, Gaurang Shah of Geojit Financial Services joins us.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Welcome back. You're watching First Stick here on News 9, and let's talk about markets because they are trading rather on a flattish note this morning. It's been a quiet start to the trading week. You know, we are returning after a 3-day gap, but Nifty this morning as of 10 a.m. is hovering just below the 22,500 mark. We have not seen a very big sort of movement on both the upside and the downside for the index. You know, we are expecting those immediate support and resistance levels, although we are at record high levels. So remember, it's harder to project move upwards than seeing support levels, the near-term support levels. Sensex is also holding above the 74,000 mark as we speak, but the broader markets, they are turning choppy. The mid-cap and the small-cap, they are seeing divergence in performance. The mid-cap index is heading higher. It's up about 0.26% as of 10 a.m. and the small-cap index, it's down 0.4%. Very close to its day's low. Volatility continues to see a spike up this morning. India VIX is up almost 6% as of 10 a.m. It's back in that 14 zone and moving higher. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Thank you for joining us here on News9, Gaurang. Always a pleasure speaking with you. And I mean, the large caps, clearly they are firing on all cylinder. But thing to notice over here is that no single up move so far over the last few months at least has been broad based. It's been led by one or two sectors, and also now the broader markets, they are showing signs of weakness. I mean, what are you making of this setup, and can large caps stay afloat at a time when the broader markets are drowning? Gaurang.
Thank you, Suyash, and morning to all of you also. I think the problem is the mid, small and micro cap started from the time we had that advisory coming out from the regulator. And of course, the kind of flows that we were witnessing in the funds which were totally focused on mid cap, small cap, micro cap. And by default, Suyash, when the fund manager gets additional money in that fund, he's got no choice, he or she's got no choice but to deploy into buying the stocks which are falling under that universe. And thus the valuation starts looking very rich. If you look at the earnings of these companies and if you reflect that on the share stock price, it did not command that kind of valuation. So I think sanity and correction had to seep in. It has happened, whether it is in form of overall sell-off or by a regulatory concern. Valuation in the large cap universe has always been attractive to us. We've been always advising to look at large cap, buy quality, don't buy quantity. And given the fact that we have seen this kind of run up, Suyash, I think we should give it to the market to take a pause, to take a breather. This week, 15th, that is Friday, we will have the advanced tax numbers. My sense is that some direction could be seen because that will enable us to understand which way the fourth quarter earnings are growing. And if I have to put a preemptive kind of outlook on it, then I think the advanced tax numbers are going to be pretty good compared to the earlier numbers, and that will possibly give us a positive outlook on the fourth quarter earnings as well.
All right, and also wanted to touch on the Tata Group stocks because they are trading under significant pressure today. This is of course on the back of reports that Tata Sons is looking at ways to avoid going public next year, and as per the current regulatory structure, Tata Sons needs to go public by September 2025. Gaurang, coming to you, I mean, why do you think they are avoiding a listing here? If you could help us understand that, because we have been told that going public helps you unlock value, helps you simplify complex group structures. Can you help us make sense of things, sir?
Well, even I'm of that opinion what you are, Suresh, that it brings in discipline and brings in a lot of participation. It creates value for investors, etc., etc. But along with that, when you're going when you're going public, your obligations also multiply to that extent, and you fall under the regulated category, and you have to go by the rules and regulations which have been set aside for all those entities. So maybe they just need a little bit of breather. I have no idea. I cannot look into, or I cannot do crystal ball gazing into why they are trying to hesitate. Sooner or later, you will have to do it. So it is better to do it now than later. It will simplify a lot of things. And by default, I think with the kind of valuation that this company has, it's going to be, in case, as and when they come out with an IPO, I think it's going to be one of its kind.
All right, it will be a one of its kind IPO, but so far it looks like they are avoiding it, and certainly this morning the markets is not too happy with that. But what they are happy with is insurance stocks. They are doing fairly well, and this is on the back of strong insurance data that came out for the month of February. Amit, fill us in, please.
Yes, all insurance companies are looking good. New business premium rose 48% to rupees 33,913 crores in February. Life Insurance Corporation, the SBI Life, HDFC Bank, ICICI Prudential all gave very positive growth numbers year on year. HDFC Life slightly less than the rest, but it was in the positive. The increase in total number of policies sold was only 9%, and compared to the previous year, all the companies grew more. Their market share was more than it was before, apart from LIC. So probably they are all eating into the market share of LIC, which is still humongous at around 58% thereabouts. Gaurang, what do you make of this sector? And the segment that has done the best is the private insurers, who have basically grown the most. So are these people, are these stocks the future market multi-baggers, so to say, in the times to come? And is the LIC stock market share going to be eaten up more and more as time goes by?
So Amit, I don't know what multi-baggers are in the market, to be honest. I never follow them. I never chase them. We look at businesses and opportunity and the growth prospects. And on the insurance sector, I think Suyash will recollect very well. We've been extremely positive on the insurance sector. And as a disclosure, LIC, right from the time we had an IPO, and we know the history of the listing and the underperformance and then the outperformance. So we like LIC, we have a positive coverage on SBI Life, HDFC Life and ICICI Prudential Life. And we always believed, and I had a very strong conviction that after the pandemic, the entire approach of an individual to take an insurance product, term product, I'm not talking about ULIPs, because those are useless products, according to me. So not only did the wisdom prevail upon better side for individuals to take larger sum, given the kind of uncertainty and the kind of life that we live. And earlier the approach was you take insurance so that you will save a little bit of tax. Now the approach is you take insurance, the term insurance, with a decent sum assured, so that if something happens to happen to you, then your family members can fall back on something. And that's the big rude awakening that a lot of people have gone through. And that translated into a lot of positive revenues in form of new insurance premiums to the insurance companies. So I think this is just the beginning. We are at the top of the pyramid. I think that's a long way to go down, the top-down approach, as we call it. And these companies are likely to do well. Whether they're going to turn out multi-baggers or not, I have no clue, but they'll be good investment opportunities.
All right, and what do you think of the general insurance space? I mean, as we see a turnaround in the consumption story of India, people are likely to buy more houses, more cars. Is that a theme that one can look at?
So business is going to grow multifolds, Suresh. And if you're going to become the next trillion-dollar economy, you can very well have an idea about what kind of manufacturing and services industry we're going to have. And that will lead to a lot of opportunities. So, between the two, that is life and non-life. Non-life was doing good even otherwise. It was the problem with the life insurance companies, which were a little bit underperformer. In the non-life general insurance segment, if I have to name one particular company, then that will be ICICI Lombard, on which we have a fundamental coverage.
All right.
Yeah.
Gaurang, all right, before we let you go, could you, give us some sort of a, I mean, for our retail investors, because the markets are at record high and we are seeing some signs of crackdown in the broader markets, and a lot of sectors are not participating in this rally. I mean, a few are, of course, they are keeping the markets buoyant. But, what should be the ideal strategy for the next couple of weeks or months?
Well, honestly, Suyash, I'm glad you asked me this question, because through your channel, I would like to make a humble request to all your viewers, investors, that, and it has been a history, Suyash, whenever general elections are there, market tends to get a little bit nervous, especially when you are at an all-time high. We've not been here, we've not seen this, and we've not done that. So in a similar situation, though the outcome of the election is by and large known to most of the people, I hope it is as per the expectation what the street also estimates the election outcome. But till the time we have seen the election done and dusted, result out, and government in place, being at the highest level where we are right now, the choppiness and volatility is going to be equally higher. So if you don't have that risk appetite, if you are of a weak heart, take money off the table, come back to the market in the next 3 months when we've seen the election and the outcome of that. Though you may end up buying a little bit expensive at that time, but it is always better, whenever market is giving you money, it's better to take that money if you have a low risk appetite. But if you have a high risk appetite, my sense is that from now until the result outcome, you will have huge opportunities at lower level to cherry pick all those stocks on your shopping list at a decent valuation. This advises to all those viewers and investors who have elevated risk appetite. And I'm sure election is going to please a lot of people, including you and me.
All right, and so I mean, it's rather paradoxical that we talk about, this different sort of strategies, growth and value investing, because I mean, wherever there is value, there will be growth, right?
Absolutely. And Suresh, the problem with us is that we are not confident enough about what we can do in terms of stock market, in terms of performance, in terms of economy. We still need borrowed brains to tell us what we can do. I think it is time we have to mature ourselves.
Certainly, sir, certainly. Words of wisdom always from you, sir. Thank you for giving us your time and your thoughts here on News9.
Thank you very much. All the best.
But before we wrap things up, let's look at how the markets are doing, because they are slipping, and as of 10:10 a.m. they are very close to their day's low. Nifty as we speak is just hovering above that 22,450 mark. The low of the day sits at around 22,436, so we are just about 14 points above that. Sensex as we speak is also, has just broken below that 74,000 mark. That was the key level for the index, which we had actually claimed for the very first time last week. So a break below 74,000 could lead to some bit of a correction in the markets, and the broader markets, they continue to show a mixed picture. The mid caps are doing fairly well. They are up 0.2%, whereas the small cap index is down 0.5%. We did see some bit of a pullback in the small cap index, on Thursday, but it seems that it was, in fact, we could see recovery from here on as well, but it looks like it was a dead cat sort of a bounce. So keep an eye on the broader markets, because the valuations are certainly a concern, and that's what has been hinted by our experts as well, that some of these stocks have done fairly well, and volatility, that's going to be a problem going forward, especially because we are heading into general elections. So if you have made money in the markets, maybe take some off, but if you have a high risk appetite, the markets could deliver good set of returns, healthy set of returns, but the way up will be bumpy, will be choppy, because we have got lots of things and lots of cues to keep pay attention to. But with that, it's a wrap on this edition of First Take. Thank you for watching.